Realty Income is a real estate investment trust, or REIT, that is widely regarded as one of the most attractive investment options for investors seeking long-term stability and income. The company's unique business model and impressive track record makes it a great investment opportunity for all types of investors. In this video, we're going to talk about why, in my opinion, I think Realty Income might be one of the #1 dividend stocks an investor can buy. Realty Income's business model is simple but effective. The company invests in high-quality commercial properties and leases them to a diverse range of tenants across various industries. The company's portfolio includes over 6,500 properties that spread across 49 states in the US as well as in Puerto Rico and the UK. The properties are leased to more than 600 tenants, with no single tenant accounting for more than 7% of the company's rental income. So Realty Income's portfolio is well diversified and ready for pretty much any market conditions. One of the main reasons why Realty Income is such a great investment opportunity is because of the dividend. Now, some quick stats on Realty Income's dividend is as follow. Realty Income's forward dividend yield as of the filming of this video is around 4.87%. So just hovering around 5%, which is a very, very solid starting yield. The annual payout is around $3.06. The dividend growth is 26 years, which is outstanding. The amount paid every single month is around 26 cents, and the frequency of the dividend payout is monthly, which investors like myself love. Now, a quick look into Realty Income's dividend history, you can see one thing's for certain. Realty Income does one thing when it comes to their dividend, and it's raise it higher and higher over time. For example, to give you an idea, in 2000, Realty Income was paying around 9 cents per share per month. Fast forward around 20 years and you are getting paid 26 cents per share that you hold. The company has a remarkable track record of paying and increasing the dividends to the shareholders for over 5 decades. In fact, Realty Income has increased its dividend payments every single year since inception since 1969, which is a lot longer than a lot of us have even been alive. The consistent dividend growth is a testament to the company's commitment to creating value for its shareholders. So as Realty Income over time has grown and has bought more properties and raised rents and done all the things that a high-quality REIT does, they've paid it forward to the shareholders. The company's dividend yield is straight up impressive, currently hovering around 5% like we said, which is well above the average yield of the S&P 500 and is a significant attraction for income-oriented investors like myself. There's lots of ways to make money in the stock markets, but one of my favorite ways is cash flow. Cash flow paying stocks, companies that pay you a fair dividend every single month is definitely a bonus. Now, another reason why Realty Income is an excellent investment option in my opinion is because of its strong financial performance. It doesn't take a genius to look at Realty Income's annual revenue and notice one thing. Realty Income has been raising their revenue year after year very consistently. Back in 2018, Realty Income was making around $1.33 billion in revenue, which is still a pretty decent sized REIT. 2019, Realty Income brought in $1.49. 2020, even with everything that went on, $1.65 billion was brought in revenue. 2021, $2.08 billion in revenue. 2022, Realty Income brought in $3.34 billion. That's a massive increase from year over year, almost doubling it. Now in 2023, the estimate is $3.68 billion. And 2024, $4 billion in revenue is what Realty Income thinks they'll be bringing in. Another thing about Realty Income that's outstanding is the fact that it's almost beat and has beat the S&P 500 as far as total return goes in multiple different time frames. If we look at Realty Income versus the S&P over the last 5 years, dividends included, Realty Income has returned around 54%. Where the S&P has returned around 71.5%. So although Realty Income had a nice return of over 10% annualized over the last 5 years, the S&P 500 did beat it. But to be real, it's very hard to beat the S&P 500. And if there's investors out there that are seeking income, consistent income today, then Realty Income could be a good option, even though you could possibly maybe see a bigger total return with something like the S&P 500. But you can't put a price on that income now. Now looking at the 3-year time frame for total return for Realty Income versus the S&P, it's pretty much neck and neck, with 58.1% total return for Realty Income and 61.1% for the S&P 500. So more or less, let's just say they pretty much return the same amount over the 3-year time frame. And now over the 1-year time frame, Realty Income has a total return of -7.1, S&P -8.04. So Realty Income in the 1-year time frame did beat the S&P 500 by a tad. Another awesome thing about Realty Income, like we talked about earlier, is the diversification in their portfolio. Now, Realty Income's top 10 industries, this is from the Realty Income website, the top 10% is in grocery stores, then convenience stores, dollar stores, restaurants, quick services, drugstores, home improvement, restaurants, health and fitness, automotive, and general merchandise. Now, if you are not all that familiar with different REITs, let me tell you something. There's lots of different REITs out there, and they all invest into different sectors, different industries. But one thing's for certain, this list right here is a list of pretty much recession-proof industries that are going to need to be open and are going to need to be filled pretty much in any economy, which is important and which is what we saw during 2020. Because Realty Income was receiving pretty much all of their rent payments, if not all of them, when a lot of other REITs that I even owned were really struggling. Another shocking thing to see is the portfolio occupancy. Now in real estate, anything above 90% occupancy is pretty good, obviously. Anything above 95% is outstanding, but Realty Income's occupancy over the last 20 plus years has been pretty much 98 to 99% year after year after year, which means as long as Realty Income's properties are full, they are going to be getting paid rent, and that the shareholders are going to be getting dividends month after month after month. The main reason that I think Realty Income is one of the best stocks to invest into in the stock market is because for an investor like myself, my strategy is to generate cash flow on a consistent basis and use that cash to either buy more shares of more stocks and or use the cash for bills or whatever else I want to use it for. And on top of that, I want to invest in companies that have the potential to grow over time, and also companies that are growing their revenue year after year after year. And finally, I don't want to invest my hard-earned money into companies I'm going to have to worry about. And although every single stock and every single ETF in the market does carry some risk, there's obviously some names that are more risky than others. And if you ask me, Realty Income is one of the least risky of all. Let's close out this video with some simple Realty Income stats and make your own mind up. Realty Income has a 14.6% compound annual total return since the NYSE listing, a 4.4% compound annual dividend growth rate since the 94 NYSE listing, 633 consecutive monthly dividend payments declared, and 102 consecutive quarterly dividend increases. Comment down below what you think about Realty Income, and let me know how many shares you hold in your portfolio. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.